Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about Raytheon's earnings release, Fidelity's proposal to buy Bitcoin in your 401k, and how much money you should have in your 401k in your 50s and 60s. But before we begin, as a reminder, this is a financial education presentation and it should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Defense company Raytheon released earnings this morning. Is ticker RTX a buy, sell, or hold?
All right, ticker RTX Raytheon. Love this company long term. Obviously, for those that know my background, 20 years in the Air Force, I got to use a lot of their products. Right, they have really top line equipment. They have the reason I like them over, say, a Lockheed Martin is they have a lot more expendables, which means like missiles. Things you use in a shooting war, they get used up and you have to replenish them, right? Or in peacetime, if you're not using them up, which hopefully we're not at war, then they have a shelf life, right? And you have to replace them after a certain shelf life. So I've always liked Raytheon as a company. So the question becomes, after earnings, the earnings didn't say a lot. They beat earnings, but they missed on revenue and they guided down a little bit. So that's why the stock is probably going to be off a little bit today and probably, continue to kind of wear off of its previous highs here. So this is a 1-year chart. You can see, okay, here's December where defense stocks, while the rest of the market is making new highs, defense stocks are, making recent lows, if you will. And then, of course, we have the Ukraine-Russia conflict kickoff, and that helps all defense stocks. So the story is, has it played out? Largely, yes. I mean, you went from 80 to 105, so quick math tells you what, 25% and change kind of gain, and now it's going to kind of settle in. Overall, I view Raytheon as a hold. If you're there's always going to be some defense conflict kicking off, keeping these companies in business, right? And that's a very natural. There will always be something for where we're going to need the products and services that Raytheon offers. So they're both Raytheon and Lockheed are good long-term holds. But when you look at valuation, PE's up around 38, so it's a little bit high, if you will. Pays a nice little dividend while you wait. So I would certainly say if you have it, hold it. If you need money, if you're trying to free up money to buy something better, there's not 1,000 things out there that are super attractive right now. But if you do need to free up money to put into something else, then Raytheon's not a bad way to take some of it, trim your holdings or get out of it completely. If you get out of it completely, you run the risk of forgetting about it and then not getting back into it when you should. But, a couple defense names in your portfolio is a pretty smart move for diversification, especially if you're in the individual stock strategy. So overall, I'd rate this a hold, Allison, but you could also sell some to free up some other money.
Next, Fidelity has proposed the ability to buy Bitcoin for 401k retirement accounts. Is this a good idea?
All right, so we're kind of crossing streams here, right? So Bitcoin traditionally, okay, can you say traditionally? Yes, because it's been around 20 years. But Bitcoin, and the whole cryptocurrency universe or crypto universe, if you will, always been really touted as highly speculative. And I would still say that really hasn't changed. I think both Bitcoin and Ethereum, which are the two that I invest in indirectly through proxies, we'll get more into that here in a second. But those, I think they have a long-term place in the world. I don't know how the movie will end, but I certainly think the 3 to 5 year prognosis for Bitcoin and Ethereum, certainly, and Ripple I would include there, certainly is that they're going to be higher, and they could be potentially much higher. So if you're looking for the opportunity to get something that's going to run up that 2, 3, 4x, I think you should have a position in this stuff because it's really got that kind of power. Now, imagine, if you will. So when you think of Bitcoin, you could argue what it is, but and what its purpose and all that stuff is. But if you look at it from an investor's perspective, it's the people that have it believe in it and they just aren't selling. And there's new people that kind of want to buy into it every day, and there's not a whole lot there's a finite number of it, right? There's no way to go in and mismanage it like leadership teams tend to do, where they double the amount of outstanding shares, i.e. NVIDIA. Forcing people to just bail on it because you can't hold that. But so you have a situation where people who hold it aren't selling, more people want it, and there's only a finite supply. I don't care what the underlying asset is. That's a roadmap for going higher. So that's why I like it. Now, how much money is sitting around in 401ks? A lot, right? The traditional worker has, a W-2 employee has a 401k. So, I mean, there's so much money in these things. The fact that now Bitcoin can move into, or at least people have the opportunity to buy Bitcoin in their 401ks, I think is going to even drive the price even higher. So Fidelity is doing this. We're not here to argue whether they should have done it or you should invest this way. That's up to you. Don't shame those that want to take more risk. But I would say if you do want to take more risk, I would treat it just like I say in regular portfolios, up to 10%. If you want 10% of your net worth in crypto, then do it. If you get more than that, you run the risk of the tail wagging the dog, if you will, and being a little more all in on things. Your Raytheon stock that we just talked about isn't going to zero. Could Bitcoin go to zero? Yeah, I guess, right? Any currency can go to zero, right? If it's invalidated and not accepted anymore, it just simply goes away. So I don't know. But the overall, when you look at, the first employer to put Bitcoin in the retirement plan, ding, 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 ding. Yeah, it's Michael Saylor and MicroStrategy. Of course they would. They're probably behind the scenes, have been the one pushing this hard, I would imagine. That's the proxy I use for investing in Bitcoin. I hold some. I have several clients in it that are up for the crypto exposure. And we shall see. They are continuing. They're all in. So when I say you should use the 10% rule, they're using the 100% rule, right? they're trying to put everything they have into Bitcoin. The CEO Michael Saylor believes. I would have to imagine that if you work there, you automatically either need to believe in Bitcoin or need to leave, right? Because everything's invested in it. So they're loading up their balance sheet with it. Now they can load up their 401k with it. Overall, how does that work? Are you holding Bitcoin directly? Well, it's a little bit down here at the bottom. That was my first question is, well, how are they doing this with coin wallets? Well, there's a digital assets account. There's a custom plan that can hold Bitcoin and short-term money market investments to provide liquidity. It's like, okay, because when I think of Bitcoin, I try to replace it with like dollars. And would it make sense for, if somebody said, hey, bro, guess what? We get to hold dollars in our 401k now. Everybody would be like, what are you talking about? Of course, we can hold dollars in there because everything's in dollars. Well, holding dollars versus things that are represented in dollars is a little bit different. So anyhow, consider like a mutual money market fund in a 401k. If you just want cash in a 401k, you buy a money market fund and say put 10,000 in there, and then that way you have cash available to either cash out or buy something, or to just reduce overall exposure to the market. So I think it will be, this DAA, which is fairly new term to me. I think we'll see more on that. But you'll be able to fund that, hold it in Bitcoin, and of course it just fluctuates with the price of Bitcoin. So Allison, those are my thoughts on the issue. I'm not sure it's a grand idea, but I'm not sure it's wrong either. So I think it just is, and if that's something that interests somebody, then they should go for it.
Last, the Wall Street Journal published how much Americans have saved in their 401k accounts at each age. Can you share your thoughts?
Well, yes. So here's kind of the article, and it's really from yesterday. I just came in too late. We were ready to go on air when I saw it, and I was like, ooh, good one for tomorrow. I like this tagline: a 401k account is a powerful tool that can help take the hassle out of saving for retirement. That's the Wall Street Journal. Maybe they missed the point. It is saving for retirement. That's what it is. Well, it doesn't take the hassle out of it. It is it. So anyhow, I thought that was a curious line of pontification from the Wall Street Journal there. But 401k is just like we talked about, where you can hold Bitcoin in it now or soon, if you will. So you go through your workplace, you save a percentage of your money. The company may or may not match you. If you have a match, you should always invest in your 401k up to getting that match, right? A match is also, if you want to use other words that people resonate with, use free money. And should always take free money, right? Especially when it's retirement money. So if an employer is willing to do that, they have a plan set up. You don't really have many choices with your plan. But when you show up at your workplace, they're like, hey, do you have a 401k? How can I get involved? Do you have a match? If you're in a big company, HR will talk you through it. If you're in a smaller company, you'll get one of the operations folks to talk you through your options there. You'll have a login. You'll be able to manage it, or have somebody like me manage it, but in different types of investments. So that's all the mechanics of it. So how much do people have? So it's this, but these bold, and if you can see this, there's the bold, they have the average and the median. So again, back to your stat class, hopefully you understand the difference between the two. The averages can be swayed by the tail 401k, right? So Jamie Dimon at JP Morgan, I don't know what his personal 401k balance is, nor do I want to, but I'd imagine it's got a big fat million behind it, right? So if his is 300 million, that's going to skew the averages, right? So that's why median is really a better number for a lot of things out there. So there's your stat 101 refresher if you need it. So average, I'll just say at 45, $56,000 people have put away. 55, 84,000 or call it 85, and then average balance 65 or older. And that starts, you do have to eat into it with the required minimum distributions is, below this, but all those median numbers are below 100K. So I thought that was kind of telling. And when you think, okay, do Americans undersave for retirement? I would say probably. Most of the folks, honestly, I work with are on track or even better than on track, just because those are the types of folks that kind of seek out financial advisors of, hey, I've done a lot of good things in my life and I've got a lot of money, but if I make mistakes at this point, it's going to be very costly. So I would rather hire somebody and pay them a fraction of what the potential mistake would cost me just to keep everything straight. Right? If you get up into the averages, you get 160, 230, 255. Again, there's a lot of people who never touch these accounts. I don't think this is necessarily useful. You can take your current age. So if you're sitting out there like me at age 52 and go, okay, so I should probably on average have, 161 or so in that range. So I'm towards the end of that range. So maybe I should have a little more. And then I can go, hey, check, I'm doing good. I would say this. I think these, if you compare yourself to these numbers, I think you're setting yourself up for potentially not having enough money in retirement. So let's talk about that exact phrase, enough money in retirement. Well, it's based on lifestyle, right? So I'm actually going to kill the screen because I want you to listen to what I'm saying. So enough money for retirement means you have enough annual income, i.e. cash flow, to meet the lifestyle that you live. So if you live a very extravagant lifestyle with vacation homes and yachts and airplanes, your enough income for retirement is going to be several million, right? Because you have to pay for all those things. If you live what I call the upper middle class type retirement, I use $100,000. If you have $100,000 coming in passive income in retirement, you can get by. You may not, be drinking the fancy wine. You might be drinking the normal wine. But you may not be able to go out to all the 5-star restaurants all the time, but you should be able to hit one occasionally and then spend the rest of your time either cooking for yourself or, doing what you enjoy in life, right? So when you think of that, I tend to think of the 120,000 numbers. That's 10,000 a month. A lot of people think monthly expenses and budgeting and monthly type numbers. If your house is paid off, that's one expense that's gone, but you still have a lot of other expenses out there, right? So instead of thinking averages, I tend to, and my whole podcast on time on target is based on this concept of how do I know that I'm on time on target? Well, by the time you're 35, and I'll just cover a couple numbers for you. By the time you're 35, you should have your salary, one time your salary put away. So when I say lifestyle and retirement, if you're a 6-figure type person, and you tend to live that upper middle class into retirement, you're just going to need about $100,000, $120,000 a year in retirement, right? So if that's what you're making along the way, then it's really a factor of your salary, right? Is how much you should have saved. So at 35, if you make 100K, and I use 100K just because the math is easy, right? You should have 100,000 in your 401K. At age 45, that's 10 years later, your 100,000 should have doubled being invested to 200,000, and at 10% a year, you should be able to get that up to 3 times. So at age 45, you would have 3 times your salary, or in this case, where it's 100,000 salary, that's 300,000. Same thing between 45 and 55, that 3x doubles to 6x, just because markets double every 10 years or so if you're fully invested, and you have another X that you've saved along the way, so that would be 7x. So a 55-year-old at $100,000 salary would have 700,000, and then the final 10 years from 55 to 65, again, that 7 times 7x that you have doubles, that's 14x, and now tack on another X there because you've been saving 10% of your salary. That's 15 times or 1.5 million. I think those are very achievable numbers if you are diligent about it, and especially if you're on track at 35. If you're on track at 35, you're not going to miss these numbers. It's just you've already built the discipline and the habit patterns. So what really does that achieve? So when you think of $1.5 million in retirement at 5%, so without touching principal, at 5%, that kicks off $75,000 a year. Then you tack on your Social Security, which, if you're by yourself, maybe it's 35,000. If you're married, maybe you're both getting good Social Securities. Maybe the other one hasn't worked in years and is getting at least half. So you should be pulling anywhere for, $35,000 to $50,000 in Social Security. So that 75 plus that 50 puts you right around that 120,000 a year to kind of live that lifestyle. So that's kind of your whole life in math. If you make 200,000 a year early on because you're a sales exec, well, then you're probably going to live a higher lifestyle and going to need now $3 million by the time you're retired to be able to maintain that lifestyle. So a lot of math. Check out the podcast if you're interested in hearing more of how much you should have at every age. But overall, I think that's a great question. You should at least think about on occasion. Right. As you're going through life, don't stop and think about, don't forget to stop and think about your future at some point. So those are my thoughts on that issue, Allison.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.